Welcome, Kerwin. Retired into the stock market. Special session, June 7th, 2025. How are you?
Doing well. How are you, sir?
Welcome back. Doing good. Today I want to talk about dividends.
I am.
So you sent me some dividends on my text message. The first one I saw was 20%, which was kind of a red flag because no company is going to be able to maintain under a 20% dividend. Okay, it just doesn't happen. 18%, 16%, 1%. Well, the 1% is kind of also a flag because for a dividend stock, you want about like 3% or 5% or maybe 7 at the most.
Okay.
Between 3 and 5 is good. And if it's 2.5, maybe the stock price went up and it was 4, and then the stock price went up, now it's 2.5. That's also cool. The first thing you want to check on a dividend stock is the all-time chart to see where the price is going all the time. And I looked at the one you sent me, and it was going down pretty bad. That was a red flag. Here's ORC. So it was $70. Now it's 7. So now it went down 90%. So obviously, if the share is going down 90%, no dividend's going to pay for that. You want a stock that's going to maintain price.
Right.
My favorite dividend stock, I'll just tell you right now,
Okay.
is PM, Philip Morris. And oh look at the chart. Look at the all-time chart going up. You see that? Can you see this?
Yeah.
And then
I can see it. Yeah.
here 2.97%. Let me tell you, when it's 180 right now. Don't be afraid to pay more for a high price stock because high price stocks are what better because they've gone up and up
Right.
and made investors money and performed. And if I look at the 10-year chart, it's also good. Not sure why Philip Morris is leaping by bounds recently. Went up from about 120 to 180, so up about 60
They,
points.
they, they, they've had lots of news lately. I've been seeing it. Lots of good things. So
Good. Yeah, I remember back in the day, they were like the stock to beat for dividends. I know they were paying about 4%, but because the stock shot up so much, they're paying about 3%. Now, PM is the world market tobacco. Um, you know,
right.
shipping cigarettes to Indonesia, to China, to you know, Singapore. Whereas is the MO is the United States market, which is
Right.
Altria.
Yeah.
And here's a 10-year for Altria MO, and then the return the yield for MO is 6.89%. It's almost 7% dividend. So that's good. So that one is probably the highest dividend right now I like.
Yeah, that's actually my favorite one. That's the one I got the most of. Is
Now, I also like McDonald's MCD. I like Pepsi PEP. I like Coke KO. Pepsi, I don't know if you know, owns Frito Lay,
yes.
and which means they own Doritos and Cheetos.
Right.
So consumables, always going to be a market for that. And usually a dividend, I think a dividend should be consumables, you know. Starbucks has a decent dividend. I think Starbucks is 3%. So there's not that many unclaimed gems.
Right.
Most of these high dividend stocks, the share price ends up failing. There's a
Yeah.
big one I was into for about, I don't know, like maybe 20 years. It was called IEP, Icon Enterprises. It was doing
Yeah.
great for so long, and then one day the dividend percentage caught up, and the stock price started coming down.
No,
And that's kind of like a failure stock at this point because that one was also around 70 at its high. or even higher. And it was paying like, I don't know, like 11% dividend. And the guy, Carl Icahn, who's a billionaire stock market trader, investor,
Right.
that was his stock, and he was known to charge 20% off the top to any investors that give him money.
Mm.
And he was doing great. He has great returns, but just one day, 11% dividend, 12% dividend. The dividend price doesn't come from company profits. People think it does. It doesn't. The
Right.
dividend comes from the share price.
Right.
And people don't know this. What they do is they'll take a share price. Let's say a share price is $10, right? Though
Mhm.
I want you to have a higher share price, because the $10 share price is also a red flag, because that's the lowest share price. You want a $100 share price, 50, at least 50, 120. It's just farther away from zero. That's one thing. It's better. But if the dividend pays, let's say the dividend pays 10%, they'll take $1 off the dividend share price if it's $10. Now, if it pays 10%, that means 2.5% per quarter. So
Right.
that's 25 cents. So Monday, the shares are 25 cent or $10, and it pays a 2.5% dividend the next day. The share price will be $9.75. Does it make sense?
Yeah.
So what they do, they adjust the share price in chart every time the dividend's paid. So you can actually see a dip because they adjust it.
Right.
They
Right.
adjust the share price down all the time. But what you'll have is a lot of investors buying the share price when it dips, and then you don't really see a dip in the share price for Philip Morris, for PM, for McDonald's, for
Right.
Pepsi, for Coke, because you have those investors who are trying to get that quarter, that small benefit. Because
Mhm.
remember, if the share price dips, the percentage increase dividend goes up, correct?
Right.
Let me explain that real quick for the recording. If a share price is $100 and it pays a 5% dividend, okay, a year, that means that they're paying, it's a dollar amount, not a percentage. So at $100, they're paying $5 per year at 5%. So if the share price, that same share price that pays a $5 dividend, 5% yield, if the share price goes down to 90, you go 5 divided by 90. Now that 5% share price is now 5.5. And then that share price goes to 110, you go $5, which is per year, divided by 110. Now that dividend goes down to 4.5 dividend, 4.5%. So
Right.
when the dividend dips because it's adjusted to pay the dividend, those investors are
Right.
looking at, hey, look, our favorite company, Philip Morris, Pepsi, whatever it is, McDonald's, Starbucks, now it's dipping, and now we're going to get those shares for cheaper, and to get the same dividend, we're going to buy it when it dips. So they're buying it every
Right.
time the dividend dips for the adjustment of the share price, not from the company profits, not from the profits. People think the dividends are from profits. They're not from profits. They're exactly from the share price of the stock. And that's why when you have a 20% dividend, that's too much on the stock. That's too much weight. And it'll end up bringing the stock
Right.
price down. The stock price ends up failing. So what they probably will do
Right.
is adjust their dividend if the share price dips. So that 20% dividend that you saw on this ORC is probably going to end up being,
Right.
you know, 2% or something else, because they're gonna lower it so the stock can survive. Otherwise, the stock will just be
100%. Right.
decimated. So
Right.
on
Okay.
these big companies, you want high volume, 2 million, 5 million, 10 million a day, because that indicates
Right.
more investors are going to be there waiting to get the dividend. When the share price drops, they'll buy those shares lower because they're trying to get the benefit of the higher dividend, and the price, because they're buying it lower, so they bring the price right back up. Make sense?
Right. Okay.
If you have a low volume dividend or a low
Yeah.
low price dividend or a no name dividend, no one's there to buy those shares when the stock dips. That's why you want a popular
Right.
stock that's going places. You said that Philip Morris had some good news lately.
Yeah.
You want to share anything you remember?
Uh, I know they was talking a lot about getting into the marijuana industry and all that different type of stuff. So I don't know the exact specifics, so I don't want to say anything incorrect, but I know they've had lots of good news to come out recently. A lot of things that they're doing, putting in place. So
Now, that's actually powerful because I remember when California made marijuana legal, and at least you can get it at a shop.
right,
They used to have a medical card. Now
right,
you can
right.
just get it. Is it legal in your state?
No,
So it's going to be big when it goes legal in Texas. It's going to be pretty big.
yeah, right,
You guys still have to go to the corner.
yeah. Well, the guys that do smoke it anyway. I don't smoke, so
Allegedly.
yeah.
um,
Now I know some guys go up to Oklahoma. I think it's legal there. I think you have to have some type of card or something there though. But I know one guy. I mean, he's pretty successful at what he does. He does real estate, but he flies to Las Vegas every once in a while and just buy a bunch of it and come back. I don't know how he gets it back in and all that, but he does. So,
yeah, and back to thank you for that. And back to
yeah,
Philip Morris, I remember telling myself, "Hey, they because California's legal. This is like I don't know, like 10 years ago. I don't know.
right,
Philip Morris can easily ship marijuana cigarettes and put them in Walmart and put them in gas
yeah,
stations and make a
yeah,
killing,
right,
you know." And I thought to myself, "Hey, that's the fastest stock to get
yeah,
because they can beat any local dealer."
right. Oh yeah, all day.
And you don't have to, once. So that would be the next thing. But I thought this 10 years ago. But the
Right,
stock didn't move 10 years ago. The stock is barely moving now on the news that you said about that happening. It's like 10 years later.
right,
So even
right,
though we have an idea about a stock or what they can do, hey, they're going to make marijuana cigarettes. It could take 10 years before that to hit.
right,
So you have to keep that in mind. Don't go by ideas, go by what's actually happening. So technicals versus fundamentals. Technicals better being stock prices going up, dividend prices doing great, the volume's great. Technical, okay.
right,
Fundamentals is we're going to sell marijuana cigarettes. Well, when is that going to hit? When is that going to
right,
catch up?
right.
So and then meanwhile, Philip Morris is touting, we're going to have a smoke-free environment. Yeah, right.
Yeah, right. No, thank
says
you.
it says a billion smokers in the world. Yeah, but you know what they
Right.
did do? They bought Juul vape,
Okay.
so they have the vapes now. The which I guess is tobacco free. It's just nicotine in the vapes, right?
Right.
And then the kids are getting addicted to that, so it's just as bad probably. I don't know.
Yeah.
Um,
Oh, it's worse actually in some cases.
it's worse. Oh, there you go.
Yeah. A lot of people that actually develop heart problems like very quickly.
Sure, sure. If you're addicted to
High
nicotine,
schoolers are having heart problems. Yeah. So
sometimes when I drink a really strong coffee, it'll make my heart jump.
yeah.
Like, ooh, like damn.
Yeah.
uh, okay, so on the dividends, I don't have to tell you more than I told you about dividends I like. You can find something. It has to have a good chart.
Right.
Maintain stock
Right.
price. It has to have a good volume. 2 million a day, 10 million a day. One of the best all-time dividends, which I never bought, but it's just sitting there. Johnson and Johnson, J&J. You know about that?
Right. Oh
Johnson
yeah.
Johnson is supposedly one of the dividend kings, which is to say that. And here's some research you can do. They don't slash or cut their dividend. Do research on this. Has this company slashed or cut their dividend? Because any company can lower the dividend, slash the dividend, cut the dividend. And Philip Morris, I noticed
Right.
that they give they give me a raise every couple years. They'll raise the dividend percentage. What? To keep up with inflation, to outperform inflation. So when you have a dividend stock, let's see if they're raising a dividend for the shareholders to beat inflation and to get a raise every so often. So they're paying me 58 cents a quarter today. Next year they might be paying 62 cents a quarter. So one research you want to do is if the dividend has been raised and maintained. You don't want it to be slashed. If the
Right.
dividend slashed, that's a red flag. However, it could be slashed a little bit just to maintain the share price. It's not a bad thing. But Johnson & Johnson, J&J, is on the list of about 10 stocks that have never lowered the dividend, have only raised the dividend over the lifetime of the stock. And the thing, I think we're talking about like a 60-year.
Yeah.
Here's
It's been worth a
Johnson &
long time.
Johnson right here, like a 60-year um, dividend payment, 3.35%.
Okay. Not bad.
And at about $155 stock. That's the kind of excellence you're going to see, you know.
All right.
Um, Also, let's look at account portfolio. Let's look at portfolio balance. Okay, you understand the concept? You have a
Yeah.
balanced account. You don't have your account all in quantum computers. You don't have it
Right.
all in
Right.
call options. You have 30% in dividends. That's safe. Like if you have
Right.
whatever cover calls over here, long-term share growth over here, and you have like 30% dividend, 20%, 30% dividend. That's going to control your drawdown. Do you know what I mean by
Right.
that?
Oh yeah.
So when you lose 10% in one day because the market flipped, or 20%
Right.
in one day, some of you guys have been big in call options.
Yeah.
More dividends means you have more balance and it won't go down as much.
Right.
And like you've seen that these dividend stocks, they only go down so much when the market corrects. And sometimes the techs are off, and Philip Morris will be up, and McDonald's will be up. You notice that?
Right. Right. Yeah. I know that part
So
also.
that helps you control your drawdown. And if you're managing a lot of money, you really, really notice it that when the market corrects, 10%, 20%, you can't afford to lose that kind of money.
No.
So when you have the dividends, it just helps your drawdown, and it helps it controls the amount of money you can lose. Write it down. Dividend stocks will control the amount of money you can lose because they don't go down that much. And then if you consider you're going to get that dividend, even if in a bad market, a bad month, a bad quarter, that dividend comes in, that money comes in, oh man, that's all the money in the world. If your tech stocks are
Oh
off and your freaking account is down after a month or 2 months, and those dividends come in, you're like, oh man, at least there's some kind of money coming in.
yeah. Right.
And over time is how you get dividend money over time. It's not in one day or 1 week, unless you bought Philip Morris, 2 months ago and got a 60% $60 gain. That almost never happens. Um, you're gonna get your dividend money over months, years. Do you know I talk about the cash cow position? You
Yes.
familiar? So you have a stock that makes 5% cover call money every month. So after 20 cover calls, you get 100% return. And now what? IonQ, Nvidia, Tesla, these stocks that have a high return on their cover calls. After a year, you're going to have 100% return on the premiums,
Right.
which is to say that your whole investment's paid for.
Right. And that's what I was
Um,
just going to ask you. Do you do cover calls on your dividend stocks also?
yes, with a caveat. Let me finish my point.
Okay.
I misspoke. It's not every year. It's about every 2 years you can double your money, or maybe two and a
Right.
half years, because it's five
Right.
percent per month. Um, Dividends are the same way, but it takes like longer than 2 years. It might take like 7 years or 10 years.
Right.
But if you were to double your money in 7 or 10 years, most investors would be very happy about that.
Yeah.
And considering what you have a good stock that maintains price, you're getting
Mhm.
paid quarterly or monthly. So these are all just like icing on the cake,
Right.
cash flow. Um, it takes patience. Write down patience because what? Because if you have a Johnson & Johnson, right, 3.5%, right? If you build your account to $1 million, 1 million times 0.035. It's still $35,000 a year. Not that much.
Right.
Enough to supplement your Social Security is what it really is. Divided by 12, $3,000, $2,900 a month. So, and then half that if you have 500K. So, it's not a lot of money, but it's enough money. Here's the thing: you gotta realize when you're doing stocks and investments, you don't want to make too much money, because when you make too much money, that can't maintain.
Right.
You're gonna have some big ass drawdown month 3 and month 4.
Right.
So you want to make just enough that it's golden, that it's steady. Write it down. You want consistency over premium. Write it down. You want consistency over premium. You want consistency because what? Consistency means it doesn't tank 1 month with your whole account, and you don't have a huge ass drawdown where you have to make what 100% return just to get your money back.
Right.
If you have a 100K and you lose 50%, you're down to 50K. And what's worse than that, you need 100% return to get your money back. That's why drawdown will kick your ass.
Yeah.
If you gain 50% from 100K, you go to 150, big deal, wonderful. But then you lose 50% at 150, you go down to 75. Now you're in the red again. So what this means is there's a couple different explanations for it. A couple of different things we say: law of diminishing returns, etc. You can't trade blows with the market. Right now, you can't trade blows with the market. That's never going to work for you. You have to be. You can't be this boxer that just takes all the hits. You can't do that. You gotta weave and dodge and block in the boxing ring. Same thing with the market. You can't afford to take all these hits and losses of money. You have to be able to avoid those pitfalls. Get a high price dividend stock. Hopefully, $50 to $100 plus. High volume, 4 million to 10 million. 10-year chart, all-time chart, stock maintains. Do the research. Has their dividend maintained? Have they slashed the dividend? Do they increase the dividend every couple of years to what beat inflation, to give the investors a raise? Those are happy investors. If you want happy investors, interview investors that invest in Johnson & Johnson, invest in MO, in Philip Morris, in whatever. Look into the dividend kings. There's a article written called the Dividend Kings. Those are dividend stocks that have been going for decades and have never reduced their dividend, have always maintained. So when someone comes to me and says, "Oh, I got 18% dividend," I'm like, "Ah, dude, I'm sorry, something's gonna go wrong with that stock. That's
Yeah.
it. It's paying too much. It's not gonna be consistent. Show me a 6% dividend, 3% dividend, then we'll start there. Otherwise, it's too much. And then if you get 1% dividend, that's too little. I don't want 1% dividend. If it's a 1% dividend, I'd rather just keep the money in the stock and let the stock go up. Just let the stock be a dividend-free stock. Like most people think that, oh, well, why do you have, like, people ask me, why do I invest in Tesla? Because they don't pay a dividend. I'm like, Tesla? Like, dude, you don't want Tesla to pay a dividend. That's going to ruin the stock. Tesla is a golden child without paying any dividend. Like, because I get money in the share growth.
Right.
And it's not even the share growth. I get money in cover call leaps and monthly cover calls.
Yeah. Yeah.
And if I'm doing naked puts, same difference. I don't need a dividend. I don't even want share growth. Just give me the premiums on selling options. Give me some shares. Let me sell some options, and I'm good. So that's the difference between somebody off the street trying to figure out how is an investor in stocks making any money. They have their own ideas. They buy the shares go up. But really, if you look at what we're doing, we're selling options. We're selling puts, selling calls, getting dividends, controlling our drawdown. Share price over time is good, but I mostly look at that for an IRA, like retirement account. I don't even trade it. Just buy some shares of Amazon, Google, Apple, and then maybe a couple, high flyers, Palantir, Tesla, and leave it there. But then you look at my monthly personal stock market account, and now I'm trading. I'm selling options, more risky, more effort, but I still got to control my drawdown. I have some dividends. I don't put everything in call options.
Right.
Questions?
One, the Dividend Kings, is that a website? Or
Um,
you said it's an
just
article?
just search just search Dividend Kings, top dividend
Okay.
stocks. Um, do you use DeepSeek or OpenAI?
I don't.
If I go
Is that something I
to
should be using?
DeepSeek is AI, artificial intelligence. I'm gonna just open my DeepSeek app. I'm gonna just put
Mm-hmm.
Dividend Kings stocks that meet high requirements. I'm gonna just put search, and an AI will give you better searches than Google. The better than Google search, it'll give you like here. Dividend Kings are stocks that have increased their dividends for at least 50 consecutive years, demonstrating
Oh,
exceptional financial
okay.
stability. Exceptional financial stability. Now, I think Philip Morris was excluded because Philip Morris split its company into two. It was one
Right.
company, and then split into two. And just the fact that it split into two took them off the 50-year list. That makes
Right.
sense.
Right.
But that's one way when it started. Just DeepSeek or OpenAI, um,
Is
Dividend
that an app on
Kings.
your phone? Is that what that is?
DeepSeek is an app on my phone. Yeah, it looks like
Okay.
this.
I'm gonna check it out here in just a little bit.
Uh, it's the oh, you can't see it here. It's the whale.
Okay.
It's the
The whale?
it's the
Okay.
whale DeepSeek. Yeah, you
Okay.
can
I'm gonna
download it. You have Apple or you have an Android. Download
Samsung. Yeah.
download DeepSeek, and it's a free artificial intelligence from China. China did it. China actually beat our U.S. OpenAI app with I think like the quality, the efficiency of it, and
Right.
it's free. And China just kind of like showed us what it can do. So I just see
Okay.
DeepSeek
Let me
is
check
better.
it
Like
out.
I can you can like DeepSeek and say, when is Philip Morris or Johnson next dividend payout, and it'll probably tell you that. Just stuff that the broker will tell you. The broker will tell you, has the dividend in this stock maintained. Now, Ben might be able to tell you if the dividend maintained. It's pretty good. It has certain questions. It's good for certain stuff, not everything.
I'm
But
gonna
check
play
out
with it here in a
DeepSeek.
little bit.
Yeah. People try to ask artificial intelligence like, oh well, sir, so and so, win the election. Are we gonna go bankrupt as a company? Then the are we gonna go bankrupt as the nation? Will be ever be invaded? Just different like
Yeah.
end of world scenarios. But I think it's good just to get a second opinion, and also you can always call your broker. Are you with Schwab? No.
Yes.
So don't be afraid to call your broker and make him do work for you, because that's doing your due diligence. Call your broker and say, hey, I want to see if this dividend has increased, when it has been slashed, and they'll tell you that. They'll look it up for you.
Okay. That'll
That's
work.
part of your customer service. Okay, you asked me, do you do cover calls on your dividends? This is a great question, okay? The first answer is no, because if you have Philip Morris, Coke, Pepsi, Starbucks, and you have your dividend, and then you do a cover call on it, what happens is, let's say you do a cover call for, I don't know, $1 in Starbucks. Well, it's nice to get the dollar, but that could mean that the stock will be assigned if the stock goes up, and then they'll sell the stock, and then you might miss a dividend, ex dividend date.
Mm.
There's ex dividend date. There's a pay date. There's two different dates.
Right.
There's an ex dividend date
Right.
and there's a pay date.
Right.
And then there's a date that you have to be qualified to get the dividend.
Right.
However, you always get the dividend. Just that it make you wait later for it. If you have the shares, no matter what time you buy it, and that morning they're going to pay the dividend, you have to have it just one day before the dividend. That's just the rule,
Yeah.
and you get dividend. But my point of that was to say that you want to do your research, you do due diligence, use DeepSeek, call your broker, have them answer these questions for you, and if you write cover calls, you have a chance of missing out on the dividend. That's what I wanted to say. So I do cover calls. What I'll do is, like, if it's Starbucks and the stock is 90, I'll write the cover call for like 95. I'll try to put it higher, because
Yeah.
if you write at the money, it's going to be a sign, and then you're going to lose your dividend. You can always buy the shares back, so you don't get a sign, but then that's just more mental gymnastics. And in the real basic sense, dividend stock, just buy the shares. Here's the thing, keep it simple. Buy the shares, get the dividend. That's it.
Gotcha.
There's one guy I want you to look up.
Okay.
I hate to tell you this because I hate to send business elsewhere.
Hmm.
But this is a black dude that wears a tie, and he's always like, he goes, "Holler at your boy," and he's funny as hell. But what he does, how I teach cover calls.
Right.
He teaches dividend stocks,
Okay.
and I don't know if I can find it here in the session. I might have to text you or send you a link, but he was in my Quora. I allowed him to post. I have. Do you follow Quora still?
Yes.
Um,
I
I have
haven't been on there very much lately, but I still have it. Sure, check it once in a while.
stock market traders space
Mm-hmm.
has I run that space. I have like, I
Oh,
don't
do you?
know,
Okay.
and I can put my videos there. But then I have this guy who he only does dividends, and what he does, he shows his whole, like, his personal account, which is cool. He's got, like, last time I checked, he has like $75,000 in that account, and he tells you, like, every week he gets, oh, I got my Johnson Johnson, I got my other dividends, and he'll show you how much his account goes up. The value of you going to him and seeing what he does is that it's super easy. There's no magic. There's just consistency.
Right.
And what he'll do, he'll put his 50K in 10 dividends, and he'll keep doing it. And he'll show you every month how much money he gets, and his account is like, just over the years, it's like this. It just goes really consistently going up on what, on
Right.
the dividends.
Right.
And you'll hear all kinds of people tell you, "Oh no, dividends don't work." Dividends, they take the money from the share price, so you don't actually get paid. Well, you should tell freaking IRS that, because IRS wants you to pay taxes on that. Anyways,
Sure.
in practice, dividends are a great way to get rich. However, patience. You're not getting 5% a month. You get 5% a year. But if
Right.
you're working, hey, you can put, you know 10-20% in your account, then get the 5% on top of that, and then you count the what I call exponential growth, then you're going to end up doing great. And if you have these stocks that maintain price, then don't have a big drawdown, and you're going to end up doing great. Um, if I don't find it right now, I'll just text you. But he has a good strategy to where he shows you dividend stocks, and I think it's pretty honest, really basic strategy. And he's just showing you, he's adding money, he's working, so he's adding money to his account, and he's buying more dividends. And his account is just
Right.
very, you've had a day where you lost a lot of money, right?
Yeah.
It almost does. I want to say it doesn't happen, because it could happen, but it almost doesn't happen with dividend stocks. Almost doesn't.
No.
And he's on YouTube, and he's on Quora, and, well, I don't see him right now. He goes, "Holler at your boy." He's funny as hell. But that's really the exception to me telling you, don't. I tell you, don't follow other people. Just
Right.
follow me. That one
Right.
guy, he does do that pretty good, and I
Right.
appreciate him. I can find him. I guess his name. We're getting towards the end of the session. Do you have any other questions?
Uh, about one more stock. I don't got it in front of me. I think it's White Horse. Is that it?
Yeah. White
Yeah.
Horse is the exception to a high price dividend stock. They have been coming down a little bit in price. I
Mhm.
want you to go ahead and do your research. I would say they're a good company, and they pay. I didn't want to lose my thing here. I want to see if I can find this guy for you. They pay like what 9%. Look at the dividend return. Is it 9%?
I think it was something like that. I have to look it up for specifics, but I got it all wrote down and then
Let me pull up. Let me pull it up. That's one of my. I follow. Well, follow. I have 90 stocks on my list, and I print them out for the group.
yeah.
And White Horse Financial is one of them. WHF, $9. So it went down from 16 at the high to $9. So it's kind of at a low, but 17% yield.
Mhm.
So what'll happen is, can you see this?
Yes.
Um, it's it's down, but it's not destroyed.
Right.
They are in trouble because just technicals, because to pay that percentage and the stocks were down to 9%, they're in a situation where it's to make it or break it. They're either gonna come up or they're gonna go down. It's hard to maintain 70% return with a $9 stock.
Yeah. So is that one of
So
them stocks where
I
you
would say with risk, you can proceed with risk.
chance it, and if they break their low, just let it go, or how would you approach that?
Are you in it now?
A little bit.
What I did with IEP, I started trimming. I had IEP about $50 a share. Then went to 30, 20, and then the dividend price goes up. Then went to 15, dividend price goes up.
Yeah.
I started trimming, and I put that money in, you know, Philip Morris and Pepsi,
Find it right
McDonald's.
now. Okay.
So because there's a high chance that it's just going to end up being a failed dividend stock.
Right.
Not a high chance, but let's say reasonable chance.
Right.
And you don't want to put all your eggs in
Oh
that
no no
bet.
no no. MO. If I was going to do that, which I'm not, but if I was, I would go all in on MO. But yeah, of course I'm a spread it around though. So hence the reason why I wanted to learn more about it. So
And even MO can have problems, you know.
yeah, correct,
However, I don't think people will stop
correct.
smoking. I don't think people will stop vaping. I don't think people will stop um, smoking marijuana. That's coming next. So
And
maybe MO is the one
I've gotten
to
I've
buy.
gotten quite a bit of share growth off of MO also since I've gotten in it. Got
Good.
quite a bit of share growth on it, so I like that too.
Yeah, I would definitely value what you just said over a high dividend percentage.
Yeah.
So, are you able to add savings to your accounts since you're working? You're working, right?
Yes.
Are you able to make monthly deposits
Yes. I do.
in your account?
I do.
Wonderful. So keep that going. When you're doing that, ideally you want to add some dividend shares.
All right.
Do you find yourself over trading, which means too risky trades, losing more money than you need to? Do you see yourself doing that?
At times, yes.
Okay, so what you want to do is, well, obviously you want to curb that a little bit because of what your drawdown, right?
Right.
But you want to put a separate account for dividends. So
Right.
you're not tempted to trade those or sell them when you want to
No,
buy
no,
call
no.
options.
Right. No.
Do
No,
you
I
have
won't do
more than one account?
it. Yeah.
So, like there's different options. Like you have Schwab. Some people have Robinhood. They have Fidelity, and then you have what? You have a personal account. Then you have what? A retirement account. So
Correct.
dividends are great for a retirement account because you won't be tempted to spend them or sell them
Right.
until you retire. because you're gonna have to pay a tax on that if you sell them before. So I would say put a large part of your dividends in your retirement account because you don't
Yeah,
really trade them or risk. You don't do risky trades in your retirement account,
and that's what they
and
are.
then you're every month you're putting money, even if it's only $50. It's gonna build up over time. If you have a what high quality dividend stock, Johnson and Johnson, PM, MO, PEP, then you have a maintained share price, increasing the dividend, consistent dividends, and then over time exponential growth. You won't
Right.
have to worry about white horse. You won't have to worry about these stocks that are teeter tottering over disaster.
I do have a question for you on the retirement account. Do you trade anything in there like
Yeah,
leaps?
yeah,
Okay.
yeah.
I was just
Like
wondering because
like I was just looking at my Apple how it was kind of like slow. So I added I sold some Apple and I put more Netflix. So I do trade. I look at every couple months and see, well, this one's doing better, this one's doing worse.
yeah.
Sometimes when I sell a stock, it goes right up after I sell it. So what the
All
fuck
right.
am I
Oh
doing?
yeah. Oh yeah.
But I try to consider like my strategy is you're going to go with the flow. So if you have a really good pattern for a stock like right now, we talked about marijuana cigarettes. We talked about Philip Morris doing great. So maybe add some Philip Morris because that might be the next $200 dividend stock.
Yeah.
But I don't do daily trades. I don't do risky trades in my retirement because what? Because I consider that as sacred money,
Right.
not
Right.
high risk money. I don't pay my bills with my retirement account. I pay my bills with my personal account or my corporate account. So those are the ones I do the trading mostly in.
What I do is any call outs that I may have in there is all leaps. So, like I have a leap on Palantir right now. So inside of that account, I actually got in it on that dip when Palantir went down like $66. I got in it around in that leap around $71. So it's looking pretty good right now.
Can I ask what leap you have?
I have this the 160. About the 160
So, oh, you bought the call or sold the call?
off the call.
Bought the 160 call for Palantir. Interesting.
Yeah.
Well, I think it'll go to 160 and 200. That'll be a $200 stock right there, Palantir.
Yes, all that. I've been having those shares since 13, so they're looking good too.
$13.
$13, 13.78. Well, I bought my shares with Palantir.
There's another one, CoreWeave. You see that one?
I have been seeing that one. Yeah,
It
I'm
dipped,
trying to.
but I think it'll like mark my words, it'll go back to 160 and then hit a new high.
Yeah,
Kerwin, I really appreciate you. Welcome back. You want to try to schedule another session?
yeah, we can do next week. Oh well, you got to do it. Well, I guess it kind of depends on it. If you're gonna do we're gonna do the monthly next week. We can skip a week and do it a week after if you want to do that. Either way, it's fine with me though. I just don't want to take up your whole weekend with Zoom calls. So
It's my pleasure. As a mentor, that's just what I do. But let's find out if we're going to do the session tomorrow or next week, and then we can plan for one more. I wanted you to do your due diligence. Look up if the dividend stock has maintained the dividend share, has maintained the dividend, or has slashed the dividend, or if it's increasing the dividend. That's really important. But that doesn't matter if you don't have a good share price, you don't have volume, if you don't have or if the dividend percentage is 20%. Doesn't matter because then that's the more important thing.
okay.
Uh, any final thoughts?
No, sir. That's it for now.
30% dividend. It sounds kind of safe, but that's what it really is. It's just being safe.
Yeah.
The 20-80 rule. You get 80% of your income from 20% of your stocks, and you
Right.
get 20% of your income from 80% of your stocks. So that's the dividends versus Palantir. There you go.
Right.
Okay, so I'm gonna pause this.